Hello guys, and glad to have you on board again today. Wish you all an happy new year, of course, even though you probably heard that 100 times already. So let's jump right into what you guys are coming here for. Chart analysis. Though before we actually do it, just a quick intro in here, and I don't have new resolutions for 2022, but to just do the same old 2021 stuff and keep it as good as possible, of course. So not a lot of changes. We're going to maintain the weekly updates in TradingView, and I'm just going to switch the daily or intra-weekly updates, these morning moods, right in YouTube for more convenience, because sharing them just exclusively into Discord is kind of what I think reductive. So we're gonna go public with these updates, of course, but we're gonna do the same old thing, concentrated 10 to 15 minute long videos looking at charts only. No blah blah, no talking about the news flow or whatever shit people might be caring about on a day-to-day basis. So today, a quick update on S&P 500, WTI, Dixie, 10-year yield eventually, even though not necessarily now, and of course cryptocurrencies through Bitcoin only. I won't have enough time to dive into some specific context trades. Still, S&P first, still the same old context, daily reversal patterns, as we also trade with the weekly. Not enough volatile context with the squeezing pattern on both prices and momentum, so as indecisive as ever. Whoever's trying to make a trend trade in here is going to be very violently proven wrong. Of course, time is of the essence in here. We're going to get a reversal. It's not even a question. The only way out of this would be turning this market into excessive territory, which means the everything bubble and things like that. We've already talked about that. It is still a possibility, but by far not the likeliest one. So we're going to get a reverse. We're going to get a market top, probably earlier, probably sooner rather than later, but it's still hard to figure out any timing when we have such low volatility. So understand that it is an appropriate time now to take the fucking profits before the market reverses, because we can get some harsh, violent reversals. If you want to get a glimpse of this, getting into some more details, what you want to have a look at specifically is the big boy Apple. It is definitely the leader into the big bullshit we're into now and the massive risk-taking and accumulation, as Apple is still trying to gamma squeeze whoever is trading options. So as long as this motive goes on, as long as the gamma squeeze trader are in control of short-term prices, let them do their shit. We are unfolding context boxes on weekly chart basis, both on the support and resistance context, which means the DOMs are controlling prices, or at least dumb short-term professionals, okay, those who don't nearly give a fuck about Apple's valuation but are just gambling on gamma squeeze trading, short-term derivative options. Don't try to fight them, okay? They will be wrong one day and only one, and when they'll be wrong, they're gonna lose a shitload of money. But if they done it right, they're gonna have made more before. But if you jump on a party that has already started for way too long, you are going to be the one left holding the bag. So no buying Apple anymore. Take some fucking profit off the table and leave it to those who are trying to gamble with price on a short-term basis. Why do I say that? I say that because the day they will be wrong, there will be just one of these days, and it very likely will show up with a down gap. So whoever is buying and holding on an overnight basis is making significant risk-taking. So don't ever do this. If you ever trade Apple, boy, you better have to be a professional. And these guys know that they need to get the fuck out on a day-to-day basis. So one day they will not be there to buy, and the market will gap down probably 5 to 6% approximately. So when this day come up, when you see Apple down gapping at the open, oh, big red flag. This is probably going to be the day in which we'll get significant enough volatility to reverse the S&P 500. Until then, day-to-day basis short-term gamblings, and let it play its game. It's not yours to play. Okay? So understand that, please. When it comes to, therefore, the Dixie, a big boy Dixie, we are trading the same old reversal pattern area in which we have the monthly closed Bollinger Band right on top of our heads, and we had the updated values we were willing for. It is 97.15, but of course, monthly candle closes will matter to settle for these volatility boundaries. So if we were on the verge to collapse all along January, which could be a possibility, then in that perspective, the Bollinger Band will lower its value and possibly down to 96, which means we could currently trade the monthly market top of dollar. It's hard to figure it out. Just understand it that way. Trading volatility, when such volatility is possible to show up, is going to be absolutely stupid to figure out a perfect price to enter. Okay, so considering out like a big area, and we might already have the market top. No one knows that, so pay real attention to the Dixie on a day-to-day basis. So look at this boy, okay? Then USD WTI has shown some early reversal patterns into the expectable prices, which were the previous 2018 market top. I think the market is building kind of a head and shoulder pattern in here. So I expect the right shoulder to show up into the nearby area, but also pay attention to timings, which means these things can still extend for a few weeks, ranging in a short run, when I think anyhow and anyway, sooner or later we'll get the downside breakout of this head and shoulder. But of course the market is not going to get to the target. Only the DOMs will be able to figure out that oil will go down to $44, probably won't go down there. There is a massive long-term support, so of course if it ever were to drop down there, I would definitely buy. But as a short seller on this, I'm only targeting getting right down to the moving averages prices and the average range to build some kind of a bottoming structure, because of course down $56 would be a cheap price for oil. So I'm not getting excessively bearish, but I don't think the narrative of $100 WTI whatever is going to work. There's going to be a slowed demand if we are heading into stagflation territory, which I still believe is by far the likeliest outcome for the years to come. That is for the background basis, so pay real attention to the USD WTI, on a day-to-day basis. If it shows signs of reversal confirmation, which very likely will show up as overbought clusters are now rejecting prices on a trend channel, it is a very bearish sign, but of course no one pays a fucking attention to this but the smart traders only. So look out for these things. As long as prices work into the short-term areas, I'm still looking for bear trades. When it comes to cryptocurrencies, we're going to just look at Bitcoin, okay? But to make it plain simple, Bitcoin is in the Wyckoff accumulation type of pattern, which we've assessed weeks ago, right before it even showed up. And we have the perfect pattern being at play. If we look at the 4-hour charts, it's definitely this. This was the supposedly technical support. The market fucked it all up, of course. Then we got the algorithmic rebounds. The market flushes right down again. Now we've got the second test, resistance test, okay? And now we're headed for the spring. So you know that the accumulation on the Wyckoff patterns can have multiple structures, and of course whoever think they know about the pattern, whatever, is just an absolute asshole. If you understand everything you need to know about Wyckoff, is that there will be no similar Wyckoff to play. It will be on the overall structure more like a sentiment driven stuff. So I would look at sentiment now, and this is what it looks like, okay? On the sentiment basis, we're still trading at fear territory, leading me to believe that the spring is very less likely going to happen. But still, I'm getting ready for it. So let me just explain how I personally deal with it, okay? If we get a spring, I'm going to show up some cash. I've got some spared cash, and I'm going to use it to buy Bitcoin and safer assets like Monero, Link, and things like that. If the market flushes it down, I'm going to buy these guys with cash. Otherwise, I let the pattern play its game and I let the DOM talk about it. Okay, are we going to break the 46K bottom or whatever? I don't pay any attention to this. The only things I care about is, are we going to get back up there, in which we're going to build? I think this time 52K will be able to work its way up, and we're going to build a sign of strength. Okay, so next stop now is either we spring this area and I'm going to be willing to buy if someone is dumb enough to sell Bitcoin at 44K and below, or otherwise I'm going to wait for the market's recovery heading into a sign of strength territory at 52K. And in that perspective, I am not going to reinforce out there. I'm just going to let the market work its way up. Okay, so same old Wyckoff pattern, meaning that patience is key. Just like we have absolutely no visibility on the timings for the S&P 500, it's the same party at play for Bitcoin. And finally, whoever is trying to play the coordinated trades, saying that if S&P goes up, then Bitcoin go up, but if Bitcoin goes up, the S&P cannot go down, don't be dumb enough to think of it, okay? There is no such a thing as a positive correlation in Bitcoin and S&P 500 because they have totally different contexts. We have reversal context on the S&P 500 just like we have accumulation context on Bitcoin. So how the hell can this provide a positive correlation outcome? It's very less likely going to be the case. There is mid-term to long-term correlation between the two asset classes, but still it is an unreliable stuff because we lack of history to prove it. So don't be dumb to correlate trade assets in which we lack proven data to suggest such a thing is happening. And every correlation anyhow is an oscillative stuff. They are sometimes positive, negatives, and stuff like that. So yes, we can have bullish Bitcoin and retracing S&P 500 because of what we said. The S&P 500 would likely rotate assets inside its game, okay? Meaning that the money may go out of something, possibly more importantly the GAFAMs, which will bleed out money if they ever fail to meet the expectations, which they will do sooner or later anyway. And on the second hand, there are very shorted asset classes like the biotechs and some video game structures and stuff like that, which are on yearly or at least monthly to weekly supportive areas. They can very well handle the money flowing out of GAFAMs getting into those oversold clustered assets. Still, be very cautious with that, okay? I don't think the S&P 500 is on the verge for massive gains into 2022. We'll talk about that in greater details into the weekly updates. Enough for today, guys, so be very cautious. The crypto market can be very tricky. As long as Bitcoin do not make its own decision, everyone will follow. If Bitcoin is on the verge for 44K and below, then of course the rest of the market will bleed the fuck out. If the market doesn't bleed out and if Bitcoin somehow recovers and breaks above, okay, there is nothing but noise until we break above the top 50% line, which is 49K. As long as we do not break 49K, there is no such a thing as a recovery heading into sign of strength and 52K-ish area. Okay, so bear these levels in mind. They're going to last for all week long. As long as we are maintained below 49K, there's no such thing as a recovery. There's just uncertainty and short-term gamblings. I have received alerts from Glassnode today about excessive leverage on futures derivative contracts of the Bitcoin charts. So be aware that volatility and dumb trades will show up, and they will be mostly driven by sentiment. We do have a little bit of room to work to the downside in terms of sentiment, to go extreme fear, for example. So everything's possible. Don't try to be the dumbest guys who are trying to forecast what a Wyckoff pattern will be about. It's more like a market-making perspective. If too many people short, then the market will not go down. If too many people buy, then the market will flush. It's really that simple. The market makers are accumulating, and we have signs of that excessive leverage building itself. So sooner or later we'll get the outcome. It's just a 50-50 game. Don't be among the ones who buy or sell in such indecisive contexts. So wait and pick that up if the market flushes down. Bye, guys.